Hi there, you're watching Market Cafe on ET Now with me, Shreyanshi Singh and Priyanka. Over the next 1 hour, we'll get all of your news and updates from within the country as well as across the globe. Tell you which stocks you should be keeping on your radar and tell you what the brokerages are saying as well. Well, first things first, we've got to take a look at the US markets and quite the interesting trade with that post-election rally waning off.
Morning, Shreyanshi. In fact, yes, the indices also closed near the flat line. But you know what the big point is, Shreyanshi, that thank God we're close to end the week now. Today it's a truncated week. The way Indian markets have fallen, of course, bull traders would always be looking for when is the week going to end. Last day of the week. But then let's see what kind of cues have we gathered from US markets. Now, S&P 500 and Dow, they both closed near the flat line. S&P inched higher by nearly 0.02%, which is just a flat point, to close at 5985 level, while Dow, that one ticked up 47 points, that is 0.1%. Nasdaq ended the day by 0.26% decline, and that closed at 19,230. Now, CPI figure has come in, and that has come in line with expectation. Now, this has accelerated slightly to an annual inflation rate of 2.6%. Core CPI, which traps out the volatile food and energy prices, that one gained 3.3% last month, also matching the expectation now. Now, with this inflation data put together, Federal Reserve on course to lower the interest rate next month. This is the kind of expectation that is set in, with markets pricing in 80% of likelihood of a quarter percentage rate cut now, as per what we have gathered from the CME Fed Watch tool. But at the same time, bond yield, they were little unchanged yesterday. Investors assessed, of course, this key inflation reading, coupled with the expectation of the Fed rate cut. Equities was closing near the flat line, Nasdaq declining. Fed was bond yield was little unchanged yesterday.
Well, absolutely, but can't really say the same about oil because you did see a rebound coming in on short covering after prices fell near a 2-week low in the prior session on OPEC's demand forecast cut. While you did have a stronger greenback that also hit a 7-month high, capping crude's gains as well. So when you take a look at price moves then for Brent, you're looking at an uptick of just about 39 cents or 0.5% thereabout. $72 per barrel is what Brent was doing. And when you take a look at WTI as well, similar moves coming in for WTI as well. 31-cent uptick coming in or 0.5% uptick coming in there as well. $68 per barrel is where WTI also was at. But the benchmarks, of course, closed at the lowest level in nearly 2 weeks on Tuesday after the OPEC had really lowered its global oil demand growth forecast for 2024 as well as 2025 amid demand concerns in China. Now, softer Chinese demand has been quite the concern of late, and OPEC also cited weakness in China, India as well as other regions for its decision, which marked the producer group's 4th straight downward revision for 2024. But currently, when you take a look at oil prices, you do see that rebound coming in. So not looking at those cues, but we're also keeping an eye on the International Energy Agency's or IEA's estimate also. And on the supply front, of course, you do have markets that could still be facing disruption from Iran or further conflict between Iran and Israel as well. So that is also something that we're keeping on our radar as well, at least when it comes to oil prices. But quick look at gold as well, because gold prices extended losses for the 4th straight session, weighed down by a stronger dollar, as well as elevated bond yields on news that October US consumer prices increased as expected as well. And you do have that elevated bond yields that we've talked about. That also weighed on gold prices as well.
Okay, now let's quickly take you through the other stories. In fact, let's get you the key events, the key global as well as the Indian events that we need to watch out for. But before that, Bitcoin rally, that seems to be on a tear. What we have seen is that now Bitcoin has topped $93,000. This is for the first time. And ever since Donald Trump has come back, Bitcoin is on a tear. And there are expectations that maybe it will touch levels like $100,000 also. But then new levels every day for Bitcoin.
Well, absolutely new levels every day for Bitcoin. But let's also take a quick look at the events that you should be keeping on your radar. Then you do have from back home, you do have the WPI data as well as the weekly Nifty expiry that we're keeping an eye on. And in terms of data sets coming in from the US, you do have PPI as well as weekly jobless claims data that we're keeping an eye on. And from the Eurozone, there's CPI data as well as ECB policy meeting details that we're also keeping an eye on. And in terms of second quarter earnings, you do have from the Nifty pack, you have Grasim as well as Hero MotoCorp. Those are the ones to watch out for. And you also have HAL, Honasa Consumer, Ipca Labs, EID, Parry, as well as ITI reporting their numbers. So keep an eye on those counters as well. And in terms of corporate action, then you do have Surya Roshni that will be mulling bonus issue. That counter will remain in focus, and it's the last day to buy shares for a host of counters. In fact, so the likes of Astral, Concord, Oil India, RITES are the ones that I'm talking about. And when you take a look at action on the primary market front, then you do have Niva Bupa Health IPO listing as well. So keep an eye on that. In terms of other key events, you also have Fed Chair Jerome Powell who will be speaking. New York Fed President John Williams, his speech, as well as Bank of England Governor Andrew Bailey's speech will also remain in focus. So those are largely the events that you should be watching out for.
Okay, now let's get you some more global stories. And the biggest headline this morning is, of course, the inflation print that has come in from United States. Largely in line with what Street was penciling in, the consumer price index rose 0.2%. This is the fourth straight month in the last 12 months, which is leading to October now. Headline inflation, that one has advanced 2.6% versus 2.4% with what came in the last month, in the month of September. In the 12 months through October, the so-called core CPI gained 3.3%, and that followed a similar advance in the month of September.
Alright, then moving on, after a scare earlier this year that the US labor market might be cooling too fast, some Fed policymakers are shifting their attention then back to inflation risks as they also weigh when and how fast and far to cut interest rates. For instance, the Dallas Fed President Lori Logan also believes that it is important for officials to exercise caution on rates here on the back of inflation risks, even as progress on pricing pressures has been broad-based. Meanwhile, you do have the Minneapolis Fed President Neil Kashkari as well, sounding a tad bit more optimistic, said he's confident that inflation is headed in the right direction, noting that data released confirms that downward path. Additionally, he also assured that the central bank has kept inflation expectations well anchored. So that's the word coming in from Neil Kashkari as well.
Okay, but meanwhile, the US budget deficit, that one jumped nearly fourfold to $57 billion in the month of October, and this figure inflated by one-off factors. October deficit in the country was up to 87% from the $67 billion deficit in the month of October last year. But calendar adjustments in benefit payments had cut that month's deficit nearly in half. As reported, federal receipts for October were down 19% or $77 billion to $327 billion compared with October 2023. While October outlays were up 24% or $114 billion to $584 billion.
Alright, then moving on, American semiconductor giant AMD has announced layoffs. In an announcement, said it will eliminate 4% of its global workforce as the company seeks to gain a stronger foothold in the AI ecosystem, largely dominated by tech darling Nvidia. Remember, AMD is the second biggest producer of graphics processing units or GPUs behind Nvidia.
Alright, with this, we stay for a short break here. When we come back, we get you the cues from the Asia Pacific market.
Welcome back. Thank you so much for staying tuned in. Well, as promised, let's get you a check on the Asian markets then. And when you take a look at the Asian markets, a mixed bag is what you're looking at this point. Firstly, let's take a look at Japan's Nikkei on your screens. Should be on your screens shortly. ASX 200 is what you were looking at, uptick of just about 0.4% coming in there. And when you take a look at Nikkei as well, similar uptick coming in there as well, 0.4% uptick coming in for Japan's Nikkei. Now, of course, you do have Japanese yen that appreciated slightly against the US dollar after falling below the 155 benchmark overnight, hovering near the lowest level in over 4 months is where Japanese yen was also at. When you take a look at Hang Seng, though on the flip side, you do have a downtick coming in for both Hang Seng as well as Shanghai. And when you take a look at Hang Seng, 0.1% downtick coming in for Hang Seng. For Shanghai as well, 0.2% downtick is what you're looking at there as well. So largely a mixed bag. Nikkei as well as ASX 200 holding on to that shade of green coming in, and Hang Seng and Shanghai on the flip side holding on to that shade of red. At this point now back home, of course, we should shop around the 23,600 levels, and currently what you're looking at is a rather subdued start, and we did not have a good day in trade yesterday. All of the sectors were holding on to that shade of red coming in, and there were no sectoral gainers, so it was quite the bad day in trade for us yesterday. Let's see how that really pans out for us. What with that mixed handover coming in from Asian markets, as well as the bad handover that we had on our hands coming in from Wall Street as well, Priyanka.
All right, but then let's understand what is the action pack that we have for our viewers today. Of course, coping with the sell-off we have at 9:20. We'll speak to the technical analyst at CLSA, Lawrence Blanco, because we've fallen down below 200 DMA now. So where the market can possibly find support at, we take it with Lawrence. At 9:30, we have A. Balasubramaniam, who's the managing director and CEO from Aditya Birla. What is the DI action, what we can expect from at this point in time? A good buying figure which has come in from DIs yesterday also, but how much cash more, how much immunity DIs can bring in? Taking it with earnings with ET Now at 9:40, Pavitra Shankar, Managing Director Brigade. We speak to her, post the numbers. We speak to Happiest Mind MD and CFO Venkatraman and Narayanan, and even coupled with, along with him would be Joseph, Executive Vice President and CEO for Happiest Mind at 9:50. At 10 a.m. we speak to Rakesh Sharma from MapMy India. Remember, this stock tumbled badly posting the numbers. And then at 10:20, we have Kirloskar Oil and Gems Managing Director Gauri Kirloskar talking on the numbers with us. At 10:30, we speak to Keshav Bhajanka from Century Ply.
Alright, then that's a power pack lineup for you right there on the market. But time for a very quick break as we do that.
Welcome back. You're watching Market Cafe on ET Now. Now, let's get you some stories from Indian markets. And the biggest story was, of course, the Dalal Street sell-off, what we saw yesterday. Dalal Street picks up the taste of correction after that 300-point decline at close yesterday. Nifty is now off 10% from September highs. Now, pain from all sides coming in. Persistent FI selling, which has been the major cause. They've sold their positions in Indian equities and continue doing so. Market cap erosion knows no end. Let's put that into perspective. 23 lakh crore have been wiped out over last 5 sessions. But with that phenomenal rise in equities, which we have seen over the last couple of months, a sell-off was largely expected. This is what experts have to say on this. Experts also believe this is, of course, temporary, and there may be recovery just around the corner now. Now, let's even get you the take from ET Now's managing editor, what he has to say on this sell-off.
Another bad day and poor day of trade for Indian markets. Why are we down? Well, you could blame it on FI selling. You can talk about money moving out because of global dollar strength, poor earnings, or rich valuations. I would say it's an amalgamation of everything which has come together in terms of what is causing this ripple. So it's easy to identify the first W, which is why. Where are we headed? I would term this as a cyclical correction. Best of the bull markets, they correct and they go through these lean patches. When markets, they tend to lose some fat before they muscle up again. In last 4 years, even though we are amidst a raging bull market, we've seen an ugly correction first because of the Ukraine-Russia war, and then when Fed had started increasing rates. So markets are not new to this kind of a correction. It's just that when the correction comes, it hits you so hard, it tends to impact your market psychology. So I'm very confident that the earnings cycle is not over. Selectively, this market has started looking attractive. And if one really looks at the market from the measure of what has affected the market first, election news, bulk of the election news is over, whether it is local or global. Second, IPOs, deluge of IPOs starting from Swiggy to Hyundai to Avari. No large IPOs are planned in the near term, so that in a sense will not have impact on market liquidity. And third and the most important, which is the reality, which is earnings, that's slowing down. But after the recent leg of decline, one would say that the market will start differentiating between men and the boys, and you will see a reasonable amount of comeback in companies where the delivery and the growth has been there. Now the important point, what you should do. Well, if you're in for momentum, well, I'm afraid that in the near term, the momentum looks challenging. The mood and the commitment levels have reversed. If you're in for long haul, remember one line, that more money is made in market by spending time in the market. We are still in a bull market, and I don't think the best of the bull market is yet to come, which means you should stay invested. If you have a sip, don't cancel it. See, you will see a shakeout, and I think that shakeout has already started happening. I'm working with an assumption that in the second half of this year, growth will come back. Festival dispatch numbers are up, and the government spending will come back. If one really looks at the combination of factors which are at play, the second half will be better than the first half, and I expect select cyclicals, few banks, especially the large PSU banks, they will make a comeback. Real estate is looking strong. CDMO companies are looking okay. Auto numbers have been decent. So net this market in a sense will give you options where you should be a buyer rather than a seller. It's too late to panic. While you can argue back and say whether it's too late to buy or not. If you're a long-term investor, don't sell. But if you are in for short-term, today, tomorrow, aaj, kal or parso, then you'll have to deal with the heat in the market. And I always say this, in market, things will go up and down. And if you cannot face the heat, you should not be in the kitchen. And this is market for you where we'll test your temperament. But the winners are the ones who control the emotions, which is control your fear and start buying, because now it's time to get greedy.
Alright, then the market is just testing your temperament, and the best of the bull market is yet to come. Now, that's the word coming in from ET Now's editor-in-chief, Nikunj Dalmia. But moving on then, how should one be playing the volatility then? Is this time to take some cash off the table? We also caught up with Jay Bala, who's the chief market technician at cashthechaos.com, and this is what we got. Listen in.
You should have been raising cash. If you haven't already raised cash, it's a bit late, but it's not too late. And going to cash is something totally underestimated by the market players. People rarely ever do. You don't weather the storm by staying in the market. You weather the storm by staying out of the market. That's how you pack the punch for your returns. And the markets generate excess alpha when you're on cash. The retailers have a much bigger advantage when it versus the institutions. You can go to 100% cash, which the retailers hardly ever make use of it. So you should be raising as much cash as possible, and you can get in and get out of the market much quicker and faster than the institutions can do. So that's a big advantage that retailers have against the institutions, and people should be making maximum use of it.
India is a mega trend. We have to invest in India on a decadal basis. You can't go wrong on a decadal basis. Now, coming to what is happening over the last 45 days. Three big issues that we are seeing in the markets. Markets were not cheap, and we have never been cheap. Second, the earnings season threw up some googlies. One was that the demand, the personal consumption expenditure saw a drag. Second, we saw that the earnings didn't really materialize as expected. So we have seen a large amount of downgrades, and which has been the first time in the last 3 to 4 years that we have seen this scale of downgrades happening. And third, the US election uncertainty, the increase in the strength of the dollar, which is negatively correlated to emerging markets.
All right, so when testing time like this only, when the word from the wise market veterans, their opinion really matters to shape up the confidence of the retail investor. And everybody is talking about the best of the bull markets yet to come. Don't stop your SIPs. This is just a testing time. But moving on, Food Safety and Standard Authority of India, FSSAI, met with e-commerce as well as the quick commerce players, along with food business operators, to discuss issues like food safety standards violations as well as mislabeling in packaged foods. The CEO has reinforced compliances to the food safety standards. We did speak to P&G former CEO Gurcharan Das also on this. Listen in what he has to say.
Certainly, we need a regulator, and certainly, but the regulator in most countries, you begin with a dialogue with the company. You begin if there are unsupported claims, if there are things wrong, these should be discussed. But there's been, what I find disturbing is that you have outstanding global companies, and to send your ED hounds after these top companies, it doesn't speak well for our own country. It doesn't speak well for the kind of regulation that we have.
All right, then time for a very quick breather on the show. When we come back, we'll take a look at the stocks that you should be keeping on your radar bright and early this morning, so don't go anywhere.
Welcome back. You're watching Market Cafe on ET now. Now let's get you key earnings which were reported post the markets yesterday. It was a muted quarter for Eicher Motors. Revenue and margin both took a hit amid lower realizations. But the management remains optimistic amid the post-festive fever. Varun joins in with the highlights and even the brokerage verdicts, what they have to say on the stock. Varun, morning.
Definitely. So this quarter was a miss for Eicher Motors, where you have seen the revenues grow by around 3.6%, but the margins have declined by around 1% from 26.4 to 25.5%. And the profits have actually grown by around 8%. Now the profits have been supported by other income, which has led to, 8% growth in profit. Otherwise, if you look the overall realizations, they were impacted. Overall, they were down 4%, and this has actually impacted the overall revenue. EBITDA was flat owing to higher marketing spends triggered by the new launches. Also, the company has spent around 12 crore, which was for extra warehousing. Now, the management in the con call have said that post-festival season, if you look, the demand was good when compared to pre-festive season. And after festivals, the inventory has actually now come down to around 2 to 3 weeks. Also, the traction was good in the month of November, and the inquiries and walk-ins were also better compared to pre-festive season. The marriage season in November has also been a growth driver after the festival season, and overall rural demand is better than urban demand. That is what the management has said. With respect to exports, management has said the rural retail momentum in exports have been good, and the company is going to focus on profitability versus percentage margin going ahead. Although Citi has actually reduced the price target on this stock from, they still have a buy, but the target has been cut from 5,500 to 5,350 because they think the overall results were slightly missed on their estimate. So the results were missed, but management commentary is still decent.
Absolutely. Thanks, Varun, for that snapshot coming in on Eicher Motors. So there you go. That's what brokerages then had to say about Eicher Motors. But let's keep it going with what the brokerages are looking at. And let's take a look at a whole host of counters. Gaurav is standing by with the snapshot of what makes it to brokerage radar this morning. Gaurav, good morning. Which are the counters that make it to that list?
Well, yes, good morning. So first, let's begin with BHEL, because CLSA has now, while maintaining underperform rating, increased the target price for the company to 205 rupees versus what it was at 189 rupees. What they're saying is that there is a resurgence in fossil fuel, and that is the reason why this is actually can provide a decadal opportunity for BHEL for the future orders. Apart from that, when we look at the order book, BHEL maintains around 16% order win ratio, which is actually healthy for the company. But when we talk about valuation, it is currently trading at 40 times EPS, price to equity, and that is the reason why they have actually maintained their underperform rating but increased the target price to 205 rupees. Other than that, we have got L&T, where Goldman Sachs has maintained buy rating and a target price of 3,960 rupees, and this is on the back of the future aspects that they are seeing for the second half of FY25. They say that there is good setup for the company for second half. Apart from that, they already have strong order inflow, and the order execution for these orders will begin in FY25, and that is something which will support the earnings even ahead. And lastly, company has also won some large hydrocarbon orders in FY24, which can actually help the company to increase their earnings, and that is the reason why this bullish stance is coming on L&T. Apart from that, let's also focus on Vodafone Idea, because we have got the numbers, and now JP Morgan has maintained their neutral stance and a target price of 10 rupees. What they're saying is that when it comes to numbers, according to their estimate, revenue and EBITDA was a miss to their estimate, but they believe that the capex is likely to accelerate in second half, and something management commentary is something which will actually drive the stock price, and that is the reason why management commentary is going to be key for second quarter of FY25 for Vodafone Idea. So definitely watching out on all these counters on the back of the brokerage note that we have received in the morning.
Okay, thanks very much, Gaurav, for all those brokerage notes. Thanks very much. Moving on, let's get you another stories. Ashutosh Sharma, who's the head of Growth Investments India as well as for Asia process, he spoke about key of the comments about, in fact, Anurag Joshi, he got in up with them to talk about Swiggy's listing. Even he spoke about the rising quick commerce competition. Let's get you some quick views from him.
A very exciting day for Swiggy and Prosus both. We have been a long-term backer of the company. We invested for the first time in 2017, and since then we have put $1.3 billion into Swiggy. Swiggy's listing today validates our India investment thesis. It validates our food delivery investment thesis. We've made some attractive returns here. but we still continue to be the largest shareholder in the company, which shows how bullish we are about the future prospects of Swiggy.
Tell us about the gains you have made through sale of your shares in Swiggy, and what's been the change in your shareholding post the IPO?
Yeah, so we are post the IPO at 24 point some percent shareholding in Swiggy. We have made over $2 billion in gain on this investment over a 7-year period.
Okay, that's a handsome return for you. Going ahead for startups, how are you looking to deploy money?
Look, I think we're very long India as process. We truly believe in the potential of India as an economy. We are very long Indian entrepreneurs. The quality of Indian entrepreneurs has substantially changed for better over time, and we are very long in terms of what technology can do to solve India's problem, and therefore I think we are very excited for what investing in India will bring to us, and we hopefully will double down, will do even better and invest even more than what we have done in the past in India.
All right, then let's keep it going and let's get you the list of stocks that you should be looking at on account of news flow as well as earnings. Ria is standing by with just that list. Ria, good morning. Which are the counters that make it to that list then?
Yes, good morning. So let's take a look at all of the stocks that are going to be in focus today. First up, we have Godrej Industries reporting quite a good set of numbers in this quarter. The net profit has gone up over 230% on a year-on-year basis. We've seen a growth in the EBITDA front as well of 116%, and even the margins have come in at 12%, which is a growth of 522 basis points over the previous year. Nalco has also reported quite a good set of numbers. Revenue has gone up around 40% on a sequential basis, net profit up 77%, and EBITDA has jumped up 65% on a sequential basis. And we've seen a margin expansion also of 600 basis points over Q1. We also have Torrent Power reporting their numbers, but a weak set coming in here. Revenue has gone up marginally around 3%. The net profit is down 8.5%, and the EBITDA and margins are largely flat in this quarter. We also have Brigade Enterprises reporting a weak set of numbers. Revenue has gone down over 21% on a year-on-year basis. Net profit and EBITDA are both down 10%, and the EBITDA margin has gone up 346 basis points over the previous year. Let's also talk about Varun Beverages, for which the QIP has been launched at a floor price of rupees 594.56 per share, which is a discount of which is a premium of 4.7% to the current market price of rupees 567.8. The indicative offer price is also coming in at a discount of 1.5% of rupees 565. Now the base size for this QIP is rupees 5,500 crores with a green shoe option of rupees 2,000 crores, and the equity dilution has been seen at 4.1%. Let's also talk about Tata Communications, which is in focus since Findi Limited via its subsidiary TSI has signed a strategic deal to acquire Tata Communications white label ATM business for rupees 330 crores. Tata Power is also in focus since Tata Power Renewable Energy Limited has commissioned one of India's largest floating solar projects of 126 megawatts in Madhya Pradesh, and this EPC contract worth rupees 596 crores has been awarded by NHDC Limited. We also have Cipla in focus since the US FDA has conducted an inspection at the company's facility in Bangalore, and the company has received 8 observations in Form 483 on this front. Lastly, Godrej Properties is also in focus since they have approved a fundraise of rupees 1,000 crores. And lastly, there are 45 stocks that are going to enter the FNO list starting from the 29th of November, and some notable names include Avenue Supermart, Zomato, Paytm, Nykaa, BSE Limited and Jio Financial. So keep an eye on all of these stocks today.
There are numbers coming in from Godrej Industries and Nalco and other stocks that you've highlighted, Ria. Thanks very much. What we get this story in detail. NSE will add 45 new stocks in FNO segment starting from November 29. Key entrants include Zomato, Jio Financial, Paytm, Delivery and even Avenue Supermarts. Now this marks significant expansion in the FNO eligible stocks. Somit joins in to tell us more on this, what this means for some of these stocks. Somit.
Well, yes, 45 new stocks will be a part of the FNO basket from November 29. Now, this expansion is quite significant given the fact that since 2015 till now, only 100 stocks were added, and now we are seeing a 45 stocks addition in just one go. So, a few stocks that we need to keep an eye out for. Firstly, it's Jio Finance and Zomato. Now, both these stocks were among the top key candidates to be included in the Nifty 50 semi-annual review back in September 2024. But given the fact that both these stocks were not part of the FNO stocks, they weren't included in the Nifty 50. Now with this inclusion coming in, both these stocks now have a very high chance of getting included in the Nifty 50 index, which in the next review which will happen in March 2025. Now as per Nuvama Alternative, if Jio Finance and Zomato get included in Nifty 50, then it could replace either two of these four stocks, that is BPCL, Eicher Motors, Hero MotoCorp and Britannia. Now if they get included, then the inflows that we could see in Zomato and Jio Finance going forward could be anywhere between 400 to 660 million US dollars, and the outflows in the for BPCL, Eicher Motor, Britannia and Hero Moto could be anywhere between 240 to 260 million US dollars. So keep an eye out for these stocks. Now as per IFL Alternative Research, Zomato could also get included in the Sensex index, and this review will happen in December 2024, and if it gets included in the Sensex, then the inflows could be anywhere between 400 to 445 million US dollars as per IFL Alternative. Now they also analyze the stock performance of the stocks that get included in the FNO basket since 2015. Now they're saying that the number of stocks that have got included in the FNO since 2015 is close to 100, and the average price movement has been positive 3.2% for these stocks. Now the percentage of stocks that have seen a positive movement from the announcement date till the inclusion date is nearly 70%, which means that 70 out of these 100 stocks have seen a positive movement since the announcement has been made of getting included into FNO until the time the actual inclusion has happened, and nearly 49 of these stocks have seen a positive move after 20 days after getting included in the FNO basket. So keep an eye out for these stocks that are getting included in the FNO. We could see some positive price action in them.
Thanks, Amit, for that lowdown coming in on that inclusion to the FNO list. But moving on, then let's take a look at what the channel checks then are suggesting when it comes to cement prices so far in the month of November. In fact, Sharad is joining in with just that update. Sharad?
Well, largely the September earnings quarter is over, and it was a weak quarter for the cement companies because of pricing pressure and also lower demand. But now the cement channel check has come, and as per report by Nomura, Pan India, the prices in November so far have increased by almost 8 rupees per bag if you compare it on a month-on-month basis prices. And in third quarter itself, it's up almost 2 rupees per bag on a sequential basis. Now the eastern region, the trade prices are up 23 rupees per bag on a month-on-month basis, but they are still flat when it comes to sequential move. Northern region, if you look at it, trade prices are up 14 rupees a bag on a month-on-month basis, and sequentially it's up 8 rupees a bag. Now the central region, the trade prices are up between 3 rupees per bag on a month-on-month basis and still down on a sequential basis by the same amount. Southern region trade prices have also increased by roughly 2 rupees per bag on a month-on-month basis, but still down almost 8 odd rupees when it comes to sequentially. And western region is still, the prices are remaining flat on a month-on-month basis and is up almost 12 rupees on a sequential basis. So overall there has been a slight increase when it comes to the pricing, but of course the demand, what it comes in, especially post the monsoon season and the ensuing new season, will be something to watch out for. But yes, there still seems a kind of a demand pressure coming in when it comes to the cement space, and that's what we have been hearing in the con call of the cement companies as well.
So demand pressure is, that's what Sharad is penciling in, what he's gathered from the con calls of different cement companies. But Sharad, do stay with us. Hero MotoCorp is set to announce its Q2 numbers. What sort of expectations Street is penciling in? What kind of margins? Of course, there's going to be a key catalyst to indicate the rural recovery also. What have you gathered?
Well, yes, one of the last earnings in the Nifty and the auto pack is Hero MotoCorp, and overall expectations for the September quarter is that revenue is expected to jump almost 7% on a year-on-year basis, coming at more than 10,200 crore rupees, while also PAT is expected to jump 9 odd %. Margins also, slight bump up is expected of roughly 100 basis points, coming in at 15%. Now also the factors to watch out for importantly would be the demand outlook both in the domestic as well as the international space, and also what would be the important timeline launches coming in for their vehicles as well. Premium segment growth is something which the Street is expecting to drive better margins, and the revenue growth expectations which is kicking in for the September quarter includes a volume growth as well as increase in realization. Now margins are also expected to increase because of better pricing mix. Also importantly, the improvement of share in the 125cc segment augurs well for the company, and that would drive a better product mix as well, and margins are likely to remain stable if you compare them on a sequential basis as there is a stable input cost and a product mix.
All right, thanks Sharath for getting us that update on what is expected when it comes to Hero MotoCorp. But moving on then, penciling in low single-digit earnings growth rate for the rest of financial year 25, and that's the word coming in from DSP Mutual Fund's Vineet Sambre. In fact, he also believes that capex-based plays are the ones that are likely to see a bump up, while signs of a turnaround are currently missing for select consumption pockets as well. Let's go across and listen into what exactly he had to say about this as well as financials.
I think clearly for FY25, there is an expectation of a low single-digit kind of a growth estimate. And, the segments which were actually doing well in terms of the growth, be it the engineering capex driven, I think there is weakness. And we've seen that the government capex has also been lackluster because of the election. So I think clearly the markets are trying to track the earnings momentum. And as we see that the momentum has weakened, I think the markets are also actually showcasing that. Both on the consumption side, we have seen that there's no big turnaround which has happened. In fact, even the urban side has weakened a bit. And as far as the capex is concerned, we have seen that the government has not been able to maintain the capex momentum. But the expectation now is that in the remainder of the period for FY25, the capex is likely to move up, which is, I think, going to be a significant, let's say if it happens, that is going to be a significant trigger for the markets going forward. Banking sector has definitely also seen some trend change where the asset quality issues have cropped up in few categories, the unsecured personal loan, credit cards, microfinance. And it is not spread across the broader, loan basket as such. And my sense is that maybe the banking sector sees some bit of this trend, the credit normalization trend sustaining for 1 or 2 quarters, and which is where we also feel that the sector should also see bottoming out. The sector has anyways not performed over the last couple of years as compared to the overall markets. The stocks are trading cheap. But overall, the health of the banking sector is good. And as the growth in the economy leads to, the growth in the banking sector with the asset quality broadly remaining good, I think we are positive on the banking sector. Maybe it takes 1 or 2 quarters for the segment to consolidate and start delivering performance.
Okay, so Vineet Sambre is bullish on the capex heavy spaces as well as the banks and financials. Moving on, let's get you some stories from across the globe. Delhi woke up to another day of severe air pollution following Wednesday's record-breaking pollution levels, which marked the worst air quality in the country. The air quality index has shot up above 400 at several areas in Delhi NCR. Whereas after a 7-month delay, the elections will be held for Delhi Civic Body MCD's mayor post today. The mayor's post has been reserved for a SE candidate this year. The LG has appointed BJP councillor from Gautampuri, Satya Sharma, as the presiding officer to oversee the election process. And an absolute shocker from Chennai, a doctor was stabbed 7 times at a government hospital by the kin of a patient. Reports suggest that the attacker was upset over the treatment of his mother, which led to the violent assault on the doctor. Meanwhile, several doctors have staged a protest at the hospital and questioned the safety arrangements at the medical institute.
Alright, then moving on, amid a row over Election Commission officials checking bags of opposition politicians, Maharashtra Chief Minister Eknath Shinde's bags were also checked by the poll officials in Palghar. The action came after Shiv Sena UBT Chief Uddhav Thackeray questioned the poll panel after his bags were checked by officials. Moving on, then, Prime Minister Narendra Modi will be visiting Nigeria, Brazil, as well as Guyana from November 16th. Now, this will be the first visit by a Prime Minister of India to Nigeria in 17 years. Modi will later be traveling to Rio de Janeiro from November 18th to 19th to attend the G20 summit hosted by Brazil as well. Moving on, then, a week after a landslide win, US President-elect Donald Trump met US President Joe Biden at the White House. This was Trump's first visit to the White House following his 2020 election loss to Biden. Biden and Trump discussed Ukraine as well as the crisis in West Asia, with Biden also promising a smooth transition.
All right, with this, it's a wrap on Market Cafe. Markets indicating a slow start, 27-point cut, what we see as far as Nifty gift implied is indicating right now. But then don't go anywhere as the market takes all the action forward.
भाई साहब